Have you ever heard the rumor that the Iraqi dinar could revalue overnight, making investors instant millionaires? This idea has been floating around the internet for years, captivating currency speculators and creating a whole subculture of dinar gurus. People are talking about a massive jump in value, maybe from 1,300 dinar to the dollar, all the way to a 1-to-1 exchange rate. But is there any truth to this? Can a country's currency really just flip a switch and become massively valuable in a single day? Today, we're going to dive deep into the myths and realities of the Iraqi dinar revaluation. We'll separate the online hype from what economists and financial experts are actually saying about Iraq's currency future. Let's get into it. First, let's get a handle on what the Iraqi dinar, or IQD, actually is. It's the official currency of Iraq, and it's managed by the Central Bank of Iraq, often called the CBI. The dinar has been around since 1932, but its value has seen some wild swings, especially after the political changes in 2003. A crucial point to understand is that the dinar is not a freely traded international currency like the US dollar or the euro. You won't find it on major Forex exchanges. Instead, its exchange rate is tightly controlled by the Central Bank of Iraq. This rate is backed by the country's substantial assets, primarily its massive oil revenues, but also its gold and foreign currency reserves. Because of this managed system, any sudden, dramatic revaluation is extremely unlikely. Why? Because it would throw the entire Iraqi economy into chaos, affecting everything from international trade and debt repayment to the daily lives of its citizens. Stability is the name of the game for any central bank, not shock and awe. Now, let's talk about the big myth, the overnight revaluation, or V, as it's known in online forums. This is the core of the speculation. Believers in the RV theory think that one day, Iraq will announce a new, incredibly high value for the dinar. The idea is that the currency could jump from its current rate of around 1,300 IQD per US dollar to something close to a 1-to-1 parity, or even higher. This belief often stems from misinterpreted statements from the central bank or, more commonly, from hopeful predictions made by those online dinar gurus. They paint a picture where dinar holders wake up one morning to find they've become millionaires. However, when you ask economists, they almost universally reject this fantasy scenario. Why? Because currencies in the modern world simply don't revalue by such a massive margin overnight. Doing so would be economic self-destruction. Imagine if Iraq's currency suddenly became as strong as the dollar. All of its exports, especially oil, would become incredibly expensive for other countries to buy. This would instantly destroy their main source of income. It would also trigger hyperinflation within Iraq, as the sudden flood of wealth would cause prices for goods and services to skyrocket. Furthermore, it would create absolute chaos in the banking system and violate numerous international monetary agreements. In short, there's no historical precedent for a modern economy successfully pulling off an overnight revaluation of this magnitude. It's a recipe for disaster. So, if an overnight miracle isn't going to happen, what does a real currency revaluation look like? In economics, a revaluation is when a government formally decides to increase its currency's exchange rate. But this process is almost always gradual, deliberate, and supported by fundamental economic strength. A country needs to earn a stronger currency. This usually happens when a country shows strong GDP growth, builds up large foreign currency reserves, achieves a positive trade balance where exports exceed imports, and maintains political and financial stability. Think of countries like China or Kuwait. Over the years, they have adjusted their currency values, but they've done it slowly, often by tiny percentages over a long period. This allows the economy to adapt without causing major shocks. For Iraq, a country still facing significant internal challenges and dependencies on the global market, a slow and steady process is the only logical path. They would need to follow this proven model of gradual adjustment, not a risky, untested overnight leap. What does the Central Bank of Iraq itself say about all this? Well, their official stance is quite clear and consistent. The CBI has repeatedly stated that it has absolutely no plans for a sudden overnight revaluation of the dinar. Instead, their priorities are focused on practical, long-term goals. They are working to maintain a stable exchange rate, which is the opposite of a sudden spike. They are focused on strengthening their foreign reserves, transitioning the country to a modern electronic banking system, and cracking down on black market currency manipulation. Officials from the CBI have even issued public warnings, urging citizens to ignore fake news and unofficial rumors about a revaluation. Their goal is to build genuine, lasting confidence in the dinar through solid monetary reforms, not through speculative gambles. To understand the dinar's future, we have to look at Iraq's economic reality. For any currency to gain value, the country behind it must be economically strong and stable. Iraq is certainly on a path to recovery. Its economy is growing, driven largely by its massive oil exports, increasing trade with partners like China, and major reconstruction projects happening across the country. However, significant challenges remain. Political instability can still disrupt progress. Corruption remains a major hurdle that siphons away resources. And the economy is still overwhelmingly reliant on oil revenue, making it vulnerable to swings in global energy prices. The government knows it needs to diversify into other industries, but that's a slow and difficult process. Until Iraq can overcome these issues and build solid confidence among global investors, a major revaluation remains a distant prospect. The steps the CBI is taking to control inflation and stabilize the exchange rate are positive and necessary, but they will take time to bear fruit. So, with all this evidence against an overnight revaluation, why do these myths continue to circulate so widely? The answer is simple. The dream of getting rich quick is incredibly powerful. Many people bought Iraqi dinar years ago, holding on to the hope of a life-changing return on their investment. This hope makes them vulnerable to misinformation. Some YouTube channels and blogs deliberately promote these revaluation rumors because it generates clicks, engagement, and sometimes they even sell so-called insider information to their followers. But it's crucial to separate hope from economic reality. The truth is that Iraq's economic transformation will be a marathon, not a sprint. It will take years of hard work, not a single magical day. Investors should be extremely cautious and rely only on credible sources for their information, like official announcements from the Central Bank of Iraq, reports from the International Monetary Fund, IMF, or official government statements. So, what could actually happen with the dinar in the future? Instead of a dramatic overnight RV, the more likely scenario is a series of gradual, positive developments. We might see incremental adjustments in the exchange rate over several years, slowly strengthening the dinar. As the economy stabilizes and inflation comes down, the purchasing power of the dinar within Iraq will improve. Increased foreign investment, driven by new trade deals and a more stable environment, will bring more capital into the country. We will also see a wider adoption of electronic payments, and potentially even a digital dinar system, which will modernize the financial sector. All of these steps can collectively raise the dinar's real-world strength over time, even if its official exchange rate doesn't skyrocket the way speculators hope. To wrap things up, while the idea of an overnight dinar revaluation is exciting, the reality lies in a story of gradual progress and hard-earned economic reform. Iraq is on a long journey toward rebuilding and modernizing its economy, but this process is complex, measured, and full of challenges. Real, sustainable currency growth is always built on a foundation of economic fundamentals like stability, trade, and investor confidence, not on sudden miracles or speculative rumors. So instead of waiting for a lottery ticket to cash in overnight, a wiser approach is to stay informed with credible information, remain realistic about the timelines, and be patient. The Iraqi dinar's value will rise when Iraq's economy truly earns it, and that's a story of growth, not magic. Thanks for watching today's deep dive into the Iraqi dinar. I hope this brought some clarity to a very confusing topic. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel for more content like this. Let me know your thoughts in the comments below. Stay curious, and I'll see you in the next video.